Hi everyone. So in today's video, we'll see about a sector which is going to double in the next 3 to 4 years, and the stocks which are in that particular sector, they can grow at a much faster rate and can give you more than 100% kind of returns in the next 2 to 3 years. So the sector that we are analyzing today is the API sector. So first we'll look at the whole pharma sector and then see what are the tailwinds that are actually helping API really grow and almost double in size in the next 3 to 4 years. So as you can see, I'm looking at a report wherein which tells us that the pharma industry, which is currently at $50 billion, is going to reach $65 billion in 2024. That is by next year. So that is again a 30% growth. And then by 2030, the whole pharma sector itself should be around $120 billion. That is from now almost a 140% kind of a growth in the whole sector in the next 7 odd years, right? So then, if you look at API, constitutes around 30 or 40% of the whole pharmaceutical industry, right? So, what are the tailwinds that are helping it? So, China plus one is the major one which is helping the whole API sector. So, in this, what is happening is the foreign countries they don't want to rely completely on China. China used to supply almost 70 to 80% of the global APIs, right? Because of the cost of production is very cheap, they were I mean, able to do that thing. But now what is happening because these countries don't want to rely on China, and even the Chinese government has become very strict on the pollution and all that stuff. China is slowly losing its market share. And who is benefiting from it? India is a big beneficiary of it. India caters to almost, can say 10-12% as of now of the global API, and it is continuously growing. So you can go through all these reports. What I'll do is I'll just post them in the description, all these links. You can just read them as well, right? And even many state governments are also trying to promote this by giving them incentives like you have the PLI scheme, you have SEZs for the pharma makers, right? So one in Gujarat, they are doing this, right? And even in Telangana, Himachal Pradesh, all of them are trying to woo these pharma companies to invest in their particular state so that the state should also benefit it. And if you go through a few other reports by analysts, you know that pharma sector is going to have a continuous growth in the coming 3 to 5 years, right? And also, I mean, not just by these reports, even if you go through each company's report, right, you would see that most of them are doing very strong capex, huge capex, which were they were not doing for the last, let's say, 5 to 10 odd years, right? Now they are pumping in money, they're going out there building capex, right? And that is going and even spending on R&Ds, that is going to help them grow in the next 3 to 5 odd years. So here is one very interesting video which I'll be sharing the link as well, or even if you just Google it, right, API sector to double by Saurav Mukherjee, you'll understand why he's so bullish on that particular sector, right? And it is not just him, even others are very bullish on it, right? So now let us understand which are the stocks that are going to benefit, because not all stocks in the pharma sector are making APIs. So it is very important for that we look at stocks which are making APIs or in the formulation business, which are going to increase their sales and eventually their EPS in the coming years. So the API sector is set to double in the next 3 to 4 years. Are you invested in it? If you're not, probably after this video, you can, I mean, you'll grow some conviction and probably you'll play it. The best thing to do it is playing the basket approach, right? Playing a different stock from different segments, and you should be able to make some money in here. So the total API market as of today. So this I have extracted from the Saurav Mukherjee interview. So it is around 250 billion, and China caters to almost 200 billion as of today, and India caters to only 30. So because of the China plus one thing, and even the other countries want to have an alternate partner. And India itself is importing some 70 or 80 percent of the APIs from China. Slowly that dependency is also going to go down as India and China are having too many clashes nowadays. The Indian government is trying to promote the API businesses, right, to give them some kind of a push so that we stop depending on China for our API imports, right? And one more very important thing, right? India used to be an textile hub, but slowly it lost its status, and nowadays all the big international brands are getting their textile manufactured in Bangladesh or Vietnam. Why? Because the labor cost there is cheap, right? So many people might feel that India will also lose that advantage. To be honest, API is a complex stuff, and countries which are poor, which have cheap labor, can't do it unless you have this technological this thing. You can't really manufacture APIs in countries like Bangladesh or Vietnam. So that is the main reason, which is kind of a moat that will help India to continuously increase their market share in the world API business, right? So in the next 60, I mean, the 3 to 4 years, the total API market, India's API market should grow from 30 billion to 60 billion. So if that is happening, this whole sector is doubling. Which are the stocks that should double in the coming, let's say, 3 to 4 years? So what I've done is I've identified micro caps, I've identified small caps, mid caps, large caps, and also proxy plays that should benefit. So Lincoln Pharmaceuticals, so these are the four micro caps. So Lincoln Pharmaceuticals, you can even see how the promoter himself is continuously increasing stake in that particular company since the last many quarters, right? Power drugs and chemicals. So what I've done is looked at companies which are having very strong operating profit margin. That tells us that they are manufacturing some complex APIs which are not really having much competition. That is why the OPMs are very good. And also, they are doing some kind of capex. So, Power Drugs and Chemicals is one. Sri Ganesh Remedies. So, this particular company, I've even made a small video on that. You can go through the my this thing YouTube channel, and you should find that, right? And one more stock is Copra. So all these did very well during that COVID, and people thought once COVID is gone, the API, I mean, the pharmaceutical industry should go down. So not many retailers are now looking at pharmaceutical industry sector as an investment. But the truth is, this sector is going to grow for the next 3 to 5 years, and also the valuations have corrected. They have become quite reasonable as of now, right? So the small cap players that are into this, Indico Remedies. So this one recently had the management came out and said that in the next 5 years they are going to be more than three times of what they are today because of the capex that they are doing and also the tailwind that they have. Eris Life Science is one, fantastic margins, doing a big capex, even Granules, Ufit Bioscience, Supriya Life Science. It's a very small company, came out with IPO. They are doing huge capex as of now, very strong margins also. Even Kaplan Point is a company that is doing capex and has very good future, right? So in the mid cap players, you have Glenmark Life Science, Suven Pharma, Laurus Labs. So Laurus Labs was a huge multi-bagger in the last run after COVID. It almost gave you 8x from the start, but then it has cooled off quite a lot, and people are not really that bullish as of now. But Laurus Labs has a smaller company called Laurus Bio, which they recently acquired. That company itself is doing huge capex, and they are like uh, w- they are the leaders in almost the whole globe, you can say, with whatever fermentation thing that they are doing, right? They are very good at that. So, and Laurus Labs itself, the parent company, is doing huge capex. So that should also slowly start to increase their sales and profits. And JB Chem, this company is anyways hitting new highs, so you can clearly make out that the theme itself is playing out in that particular stock. Glenmark Pharma, Ipca Live, right? All these Ipca Labs, all these companies should benefit as the sector itself grows. If you're someone who wants to play very safe, then you have the large caps that you can invest in. So you have Sun Pharma, which is also hitting new highs. You have DBs. So DBs has corrected quite a lot from a range of 5,000 odd bucks. It has come to 3,000 something, and it is the leader in API manufacturing, right? So if the sector itself is doubling, probably DBs can more than double their sales in the coming. 3 to 4 years. And they are also doing huge capex. And one more is Zydus Life Science. So these are the large caps that are doing capex. Now coming to proxy plays. So in proxy plays, you have alkyl and Balaji amines. Both are making aliphatic amines. These go into making of API. So it's a solvent basically. So in that you would which goes into manufacturing of these APIs. So if the this thing itself is doubling, the API manufacturing itself is doubling, then naturally these guys should also double their sales or even more than double their sales, right? So Balaji amines, alkyl amines, GMM fodder into those reacted glass lining, wherein the all this pharmaceutical industries use this particular product. So if they are going to increase capex and all of that, naturally GMM Fodler should also benefit from this particular theme, right? So these are the stocks, and if you are an investor who has time to play for the next, let's say next 3 to 4 years, and kind of even if you have a basket approach, like let's say I'm going to play a few large caps, few mid caps, few small caps, and maybe one or two micro caps, and then the proxy plays. This should give you a pretty decent return. Or else, if you don't want to play this, maybe the Nifty Pharma Bs, right? If you buy those, you should also benefit from that. But there, what is going to happen is they are not going to stick to only API stocks. Probably you would have even the generic makers as well in those ETFs, right? Or else you can just make an basket of API stocks and then do SIPs in that and benefit from this sector doing well in the next 3 to 4 years. Hope this helps. Thank you.